Well, hello. We've got a lot of people who are attending the post-budget webinar tonight. Thanks for being with us. I'm Alec Hogg, and my colleague Stuart Lohman will be making sure that everything technical happens the way it should. Stu?
Yes, thanks, Alec. I'm glad you survived the early wake up today. We know lockups are nice and early surprise for some. Many still sleeping. Just quickly before we get going, as Alec mentioned, if you can hear my voice and see Alec's front page of the presentation, there's a little high five button you can click. If you just click on that, I'll see. Yes, there we go. All the high fives coming, Alec. That's good. And then for those new to our webinars, we do like to keep them conversational. There's a little questions drop box on the control panel on the right-hand side. If you put your questions in there, I'll pass them on to Alec as he runs through what he's learned from today's budget. Alec, over to you.
Brilliant. And I'm sure that we are going to have lots and lots of questions. Stu, you just interject whenever they come through. Well, you can see what I've headlined this one as a Hail Mary exercise as South Africa's drowning in a lake of debt. There's really no other way to describe it. Before we go into this, though, just to let you know that we're very pleased to have been able to make this webinar available to all members of the business news community, thanks to the sponsorship of BrightRock. We love our business partners, and we hope you do too. Okay. So that's the graph that encapsulates everything for me. Those of you who've been to various of the seminars and presentations that I've done around the country. Incidentally, I'm doing one again next week. It's free for Business News Premium members. It's £10 or about 200 Rand at the moment anyway for everybody else in the Business News community. You can go onto Business News and go and sign up. Durban, let me just think, Johannesburg's Tuesday night, Durban is Wednesday night, Cape Town's Thursday night. Come along, have a glass of wine, have a chat, and I'll be doing, well, an expansion of this webinar on in that roadshow by actually having a look at our global portfolio, which is now no longer a global portfolio, our portfolio, and making a few adjustments. That portfolio, by the way, continues to go gangbusters. It's incredible, but we'll be talking about that. I'm going to make quite a few changes to it. So if you are able to come along, please do. I have put this graph up a few times, and you can see there when Zuma was appointed in 2009, South Africa's debt to GDP ratio was 26%. This is a very, very important number. What it means is if you imagine that a person is earning say R1 million, and they've got debt in there, or they've got assets, say, of R1 million, and they've got debt of 260,000 Rand, well, the banks would be quite happy to lend to them. But if they've got assets of R1 million and they've got debts which is much higher than that, 60, 70, 800,000 Rand, then the banks wouldn't be that keen to lend to them. And that's exactly the same way as it happens in the international community. Essentially, for developing countries, debt to GDP ratios shouldn't be above 50%. And in fact, when South Africa's hit 40% in 2012, immediately there was a change from Treasury where they said we must now get things under control and start pulling back on spending and try and get a little bit more income in other words, higher taxes, as a consequence of which we'd be able to keep South Africa's debt to GDP ratio around 40%. But as you can see, Treasury might have thought that was a good idea. Jacob Zuma and his cronies certainly didn't. And the robbing blind of South Africa over the past 9 years has had a deleterious effect that you can see in this very, very important chart, which shows you that debt to GDP in the country is now sitting at over 65%, and it is projected to go over 70% in 2023. When you look at this, you actually come to the conclusion that given the projections that Tito Mboweni and the Treasury guys are making for the next few years and in this budget itself, they've actually given up. They've given up on the ability to continue to have an investment grade rating in South Africa. Sorry, no, they haven't given up on the country, but they've given up on the investment grade. There was so much effort made to try and retain the investment grade. Remember, we've got three major ratings agencies in the world. One's S&P, One's Fitch and one's Moody's. And both S&P and Fitch have dropped South Africa's investment grade some time ago, 2017. Moody's has kept it above investment grade, and this has given the country the ability to borrow money on international markets at a lower rate than it would otherwise do. Reason for that is when you're investment grade, the bond funds around the world are allowed to invest in your bonds. In other words, they're allowed to hold South African government debt. And that's been one of the major motivators for the country to actually keep its financial situation under control, to keep the debt under control, to make sure that it doesn't rise too high. But as you can see now, the debt is at over 60%. That's, in fact, as we stand here today, it's gone up to over 65% in the coming budget, 2021, and it was projected to go to 71%. So put it all together, they're losing the battle against too much spending and not enough income. This time round, the government is not the way it was under Zuma's administration, where they really didn't care that much about these ratios. This time around, the government cares a lot about the ratios, but it's actually just caught in a situation that is pretty much none of its making. And it has to now start bailing out SEOs and doing things that are going to make it impossible to keep the debt under control, at least in the short term. Hence the Hail Mary budget that happened today. I'll get into that in a moment, but debt, South Africa's national debt has never been this high. I pushed back to the numbers. I've got the numbers going back to 1982, and you can see going up to democracy in 94, there was a big increase in the debt to GDP ratio. Then under first Mandela and then Thabo Mbeki, it improved dramatically all the way down to 26%. And since Zuma came in, it's been going in the wrong direction. One of the reasons why this government has got a problem in fixing the debt mountain that is built and is continuing to build is because the economy is just falling. It's falling a little bit off a cliff. It's not too bad, I suppose. It hasn't gone Zimbabwe method, but in a country where you've got the population growing at about 1.5%, you simply cannot afford to have this kind of a picture. And I put this graph up here, taken from the Treasury, to show you that our economic growth rate has now gone down to 0.3% for 2019. They were budgeting last year, just a year ago, they were expecting the economic growth rate to be 1.5%. Now, if you put all of your figures together on a economy that's growing at 1.5% and it actually ends up coming at 0.3, it's like saying, well, you have a sales projection of coming out at, call it 15%, and you structure your business around that kind of a sales projection, but your sales only grow by 3%. You know that your margin means that you're probably going to go out of business. Well, thankfully, countries don't go out of business. But what they do when they get this kind of performance, when their revenue undershoots and their spending isn't cut, and that's what happened in South Africa in the past year, is they have to start borrowing. And borrowing, unfortunately, has a really bad consequence. Just to look at this quickly, 2019, we were really hurt by agriculture. Not surprisingly, expropriation of land without compensation has made the farmers terribly nervous. So it's unlikely that you're going to see a substantial contribution from agriculture until that whole story has been sorted out. Mining had a bad year as well. That was through policy uncertainty, which appears now to have been addressed. And construction, you can see, was the other bad sector in 2019, and that's pretty cyclical. When the economy is not growing, then you don't have people investing in new buildings or new roads or anything new really, and as a consequence of that, construction comes under pressure. Of course, the people in the financial sector are doing okay. They are, well, that sector of the economy grew by the most of any sector in 2019, but not exactly gangbusters at 2.6. And then there you can see central government had a particularly good year if you happen to be working for the public sector. We can talk about that in a moment as well. So let's move on to what this means. Now, this is a reflection of what's going to happen in the projections. So let's just start off with that. That first column there of 2019, 2020, that's That's as of now. The government's fiscal year ends at the end of February. So they've got a pretty good idea how much money is going to come in. They're looking there at 1.5 billion rand coming in as taxes, which is undershooting by 63 billion rand. So they were expecting last year to get 63 billion rand more than is actually coming into the pot. Expenditure, though, is going to be about 17 billion rand higher than was expected in last year's budget. So spending has gone up higher than anticipated. Your income has not grown or was significantly less than you anticipated. And there you have a budget balance, which was being projected at 4.5% of GDP. Now, these are important numbers because that's what the international community looks at. The first thing they ask is, what's your budget deficit? And if your budget deficit is 4.5%, it's possible. If your budget deficit is over 6%, as this one is 6.3%, then they say, well, should I really be investing in that country? And, you know, is the currency going to be able to hold it? Because you're borrowing more than, or you're spending a hell of a lot more than you can afford. And as a result, you're borrowing. And at some point in time, you're going to have to repay those borrowings. I'm not so excited. What you can see there is for this year, this fiscal year, that budget deficit is going to 6.8%. Now, if Mboweni and the Treasury wanted to retain the investment grade rating, if that was number one priority in their minds, they would not have allowed the budget deficit to go to 6.8%. You would have seen something like maybe 2.2, maybe even 3 percentage points increase in VAT. The problem with that, though, is that South Africa just cannot absorb any more taxes. And that was the reason why we didn't see tax increases. When you look into the details, as I did today on the Treasury documents, you will see that the tax take is down substantially on what was anticipated last year. Well, we know that, down by 63 billion, but the areas that it was down in are the areas you wouldn't expect. That's in income tax and VAT. So you jack up income tax, what does it do? It makes people want to cheat more. You jack up VAT, they want to cheat even more because they can on VAT, and it turns you into a nation of cheaters. So essentially, the Treasury has said, if we push, we have already pushed taxes to about as far as we can. If we were to push it even further, it'll have a negative effect. There's a thing called the Laffer curve, which the economists will tell you is that there's a certain point at which when you push taxes above that, you actually lose money. So it appears as though you've got a higher tax rate, but you get less money in. And that is where South Africa seems to be right now. So at 6.8% budget deficit, it's almost like waving goodbye to any thoughts that there was of having an investment grade rating. That's going to have an impact on the rand, and a consequence of that is we're probably going to see higher interest rates. But the good news in all of this is that we're in a global low interest rate environment. So if you're ever going to get yourself into the kind of mess that South Africa's in, this is about the best time you could have asked for it. Moving on to the next thing, and I wanted to show you this because only 4 months ago at the medium-term budget projection, or what we used to call the mini budget, it showed that we were going to have a 1 point, there you can see the number. The projection for this for the year was 1.369. I don't want to get into the numbers there, but it appeared from the mini budget that we've actually gone 10 billion rands worse than what was anticipated at the mini budget. So sorry, I got the numbers wrong. There we go. Okay, let's start at the mini budget. At the mini budget, so this was at the end of October, Treasury said to us that they were going to bring in 52 billion rand less than they thought for this fiscal year. 52 billion, that's a lot. And remember, there's all the money that has to be spent for Eskom, et cetera, et cetera. So even though they've been trying to cut government spending, they've got this Eskom millstone and SAA millstone around their neck. So they aren't making much of an impact there. The problem with this is if you look further, so there you've got 52 billion this year, but then it projects to the next year. So they're down 84 billion in this financial year, and 114 billion in the next year. So it's like having a sales base. If your sales base in the company reverses in 1 year, you're coming off a much lower base. And it's exactly the same with tax takes by the government. But now, 4.5 or 4 months later, it's actually 10 billion rand worse than it was at the end of October. So at the end of October, we were sitting at 52 billion less this year in revenue that's being brought in. Now we're sitting at 52 plus 10.7, so 63 billion less that is coming in this year. And when you go out into future years, it looks even worse. So we're in a hole. We're in a deep hole, and that gives you an indication of where you are. The South Africa's budget deficit for this year, remember, they go from 2020 to 2021. So February this year will be at 6.8%. That is the second highest on record. And I've taken this all the way back to 1970. The highest up until this point was in 1993. And that was a time ahead of democracy where the spending really went mad. It was, if you recall, those of you who were around at the time, it was a very, very difficult period, high security issues. There was even a concern that we would have an election at all. And there was an enormous amount of spending that was done by the National Party government to perhaps use the last bit of power that it had. And we went to a record deficit there of 7.1%. As you can see, generally speaking, South Africa's budget deficits have been around 4%. And we even had a couple of years, 2007 and 2008, when we ran a surplus under Trevor Manuel. But that gives you a picture, an understanding of what's happened, or the parlous state of South Africa's finances, and indeed the finances that are going to get even worse into the future. They put a brave face on it. They reckon that the budget deficit will come down slightly in 2022 and 2023, but that is presuming that there's going to be some serious cuts to the public sector wage bill, which they've tried since 1994 and haven't. In fact, I think South Africa's just never managed to get the public sector wage bill down. And in the press conference today, Tito Mboweni bemoaned the fact that it's really, really hard to cut spending in government. He said he's trying to show a lead by example by, for instance, flying in economy class, showing people that things are really tough and we've got to cut back. He says, but in the government, it's not that easy. And he was speaking, I guess, with his private sector hat on in that respect. That's another graph that shows you the parlous state. Interest payments, it's just exponential growth that's happening there. We're getting up to nearly 300 billion rands per year in interest payments. Very scary numbers. It's around 15% now of the total revenue that's pulled in by the country is spent on servicing the interest. And there's another number. I suppose the good thing here is, as a percentage of GDP, interest payments were higher during the last days of apartheid and the early days of democracy. But the direction that you see there is something that is of deep concern. And that gives you a reason for it. As the interest bill rises, then your budget deficit rises as well. So I hope you're following all of this. Really, what I'm showing you here is that the interest, as the interest bill goes higher and higher, that takes a bigger chunk. So we're looking now at, as you can see, let's go to where we are now, 6.8% in this year. So in this year, we're going to have a budget deficit of 6.8%, and that's projected on the figures that Treasury are hoping for. Yet 4.2% of that, 2/3 of that, just goes on servicing the interest. And it's this debt spiral that economists talk about. As your interest rises, as your debt rises, your interest payments rise. And you get into a situation like South Africa's got into here, where you start off on a base where you're in trouble. Before you even think about anything else, you've got to pay your debtors and the people who own the borrowings that you have. The only way to get out of this is only two ways of getting out of this. The one is to reflate, and that means sending in inflation will actually make what you have, the debt that you have, look relatively small. A lot of this debt is fixed rates of interest. So if you're running an inflation rate of 15, 16, 17%, what a pleasure to be paying 5 or 6% interest. But of course, that does cost you in the long term. And the other way of getting out of it is getting a lot of money in. And the way that South Africa gets a lot of money in is when you have resources booms. So if you go all the way back to, well, there we go, 2007, 2008, resources were really, really screeching ahead. So you had huge money coming into the country, which enabled the country to run a budget surplus, even after paying all the interest costs. But that's the situation that the country is in. So it's quite a challenging position to be in. So looking at all of that, you now have a look at the debt service costs. As I said, they're going up to 2023, nearly 300 billion rand, rising at 4% at the bottom. We're at 205 billion this year. That 4% means a percentage of gross domestic product. And as you can see, that's growing. The interest service costs in South Africa are growing by about 12% on average over the next 3 years, which is much higher than revenue is expected to grow at around 4%. Why? Well, I don't have to tell you about Eskom, but this puts it into perspective. They gave us figures today going back over the last 12 years of what Eskom had received from taxpayers, and then what is going to happen in this year and in the next 3 years, and then the 23 billion a year thereafter. And the number comes out of 400 billion rand that taxpayers have injected directly into Eskom already. And that's before the costs of actually fixing Medupi and Kusile, which had design faults, which are a consequence, it appears, of corrupt or incompetent people being in Eskom doing the decisions on how to build those power stations. So we know that Hitachi, the Japanese company that got one of the major contracts, has been fined in the United States for the corrupt practices that it had over those 2 power stations. But the reality is that South Africa is sitting with a big, big problem when it comes to energy. And the penny, fortunately, appears to have finally dropped. There was more discussion today about freeing the electricity sector. Remember, we have had this monopoly. If you wanted to produce electricity, you couldn't sell it back into the grid because Eskom would pay you a fraction. Well, they wouldn't pay you for it. They wouldn't allow you to do it. Then in the State of the Nation address, the president said that municipalities in good standing, not all municipalities are in good standing, as we well know, many of them owe Eskom billions and billions of, well, there's a debt totally overall of billions of rands, but municipalities in good standing, like Cape Town municipality, is now allowed to actually buy in electricity from the private sector. So you've got this, it's almost like the crisis has not been completely wasted. But as taxpayers, we got to look at this and we can say, oh my goodness, the money that's going into Eskom is still going to be escalating this year. There'll be about 55 billion. Then there's still another in the next tax year, over 30 billion. And then we get back to the 23 billion a year from 2023. So the 400 billion rand that taxpayers have put into Eskom is the number that has cost us, let alone the impact that it's had, that load shedding has had on the economy. And we know that now from the financial situation of the country, where we actually the country got in 63 billion rands less in tax than it was expecting, primarily because the economy collapsed from expected growth rate of 1.5% to 0.3%. That was emphasized in the budget. And that was primarily because of load shedding. Load shedding is massively, massively disruptive. And anyone who lives in Johannesburg or Cape Town, I presume, I haven't had the misfortune of driving in Cape Town during load shedding, but I guess anywhere in the country, you're frustrated. But in those 2 cities where the traffic is bad anyway, when you have load shedding and no traffic lights, well, we just know the impact that is on the stress levels of people, quite apart from the waste of time that is spent in gridlock traffic. But anyway, there's the story. So the biggest one is Eskom. South African Airways, if you go back, we were told today in the Treasury documents, 12 years, South African Airways has cost the taxpayer 32 billion rand. So when Tito Mboweni says, and he actually flies British Airways, when he says that he's not going to support them and he actually wants to put them out of business, you can understand why. 32 billion rand just to keep it going, and it's still losing money every year with the latest money that was put in there. And then the others are pretty small beer next to that. South African Broadcasting Corporation, significant given the impact that it has on the country, but mainly Eskom and the South African Airways. So where's the tax coming from? Who's going to pay all of this? Where's the money going to be injected from? And you can see here 38% of the tax that is paid into the fiscus of that 1.5 trillion rand comes in personal income tax. I'm going to give you more detail about that in a moment. About a quarter comes from VAT, 16% from corporate income tax, and 8% from customs and excise. And the fuel levy is only 6%. Interestingly enough, there's been no increase in personal income tax this year, which is a reflection or that they can't push the envelope any further. Income tax in South Africa has got to a level where you push it up, you're going to get less money in. So you can increase the rates, you'll get less in. So what Tito has done, the one area where he has provided relief is in fiscal drag. Now, fiscal drag is when income tax, when you're working for a company, you usually get a cost of living increase. So in South Africa, it'd be about 4% just to offset inflation. That tends to push you up. We have a progressive tax system, so the more you earn, the more at the margin tax that you pay. So for years now, fiscal drag, as it's called, this bumping up of people into higher tax categories because of inflation has not been addressed. This year, fiscal drag was addressed for the first time in a long, long time. And effectively what Mboweni did was he gave back something like 14 billion rand to offset fiscal drag of 12 billion rand. I hope that makes sense. Because of inflation, if you did nothing else, there would be 12 billion rand more in income tax that would be paid this year. But to fix that or to offset that, and a little more, 2 billion more. So it's a slight improvement. You're certainly not going to be able to buy too many cups of coffee with the benefit that you get. But to offset that, there has been a slight adjustment in the tax rates so that we're not going to be penalized for inflation. That 2 billion rand is being paid for in two ways, through carbon taxes of 1.75 billion rand, and you've got to ask yourself, who's going to pay carbon taxes? Well, there's only two companies really in South Africa who are major carbon emissions, and Eskom, of course, is one of them. Sasol's the other. So those carbon taxes are now being budgeted to come in, and it's quite a chunk, 1.75 billion. And the other 250 million is for plastic bags, the price of which goes up to 25 cents. As a result, Tito's got a thing about plastic bags, and I think he's not the only one. If you follow his Twitter stream, you'll see that he loves Rwanda, where people don't have too many. You don't see too many plastic bags because people go around and pick things up. He loves cleanliness, and he's hoping we can do the same here. Maybe by increasing the price of plastic bags, be a bit like the increase in cigarettes, which went up again this year. If they get to a point where people just actually not only cut down but stop smoking. So here they are, that story that I've just outlined for you. You can see there that in total, this is the only impact that one is seeing on the revenue, on the taxes, the new tax proposals in this year. There's a small increase, inflation adjusted increase in the fuel levy, which again is unusual because the fuel levy has been going up by significantly more than inflation. It's going to go up 25 cents a litre. 9 cents of that goes into the road accident fund. Which is in a complete disaster. There's something like 600 billion rand hole in the road accidents fund. Who knows how they're going to fix it? Tito suggested today that they might make third-party insurance compulsory in South Africa. That's the proposal for it, but that's for another day. It's still going to be under discussion. But as you can see here, gross tax revenue, pre-proposals 1.425 billion, post-proposals 1.425 billion. So it's offsetting. It's of very, very little impact there. Who pays this, though? The individual taxpayers, remember, who kick in 38%. I did the numbers. The taxpayers who earn more than R1 million. So you can see those are the bottom two areas there, registered individuals, just over 300,000 people, they pay 40% of income tax. So that's 38% of the total tax that goes into the country. You're talking about 16% odd. So maybe 1/8, a little more than 1/8 is paid by just 300,000 people. So it gives you an interesting impact on or reflection that South Africa cannot afford to lose its skilled people. The skilled people are its tax base, and they are the envy of every other African country. And as a consequence of that, the immigration flow is another issue that is really hurting this country in a big way. If you have a look at the other end of the scale, you'll see that the registered individuals who don't pay tax, in other words, people who earn less than 80,000 Rand a year, and they shouldn't be paying tax there, that threshold now goes up slightly to 83,000 Rand. That's about equivalent to the number of people who actually pay tax. So you could call it 13 million South Africans who are in the tax net. Half of them don't pay tax. The other half do, but if you see, the biggest chunk of them are those who earn between 6 and 12,000 Rand a month. They only pay 4% of the total tax take, and they're almost a third of the people as a whole. So there's a very, very heavy weighting towards the high income individuals, and still they're looking for more from the wealthy. There was a statement in a line in the documentation today to say that SARS is establishing a special unit just to investigate the wealthy individuals, and that unit will be looking at complicated, in inverted commas, tax affairs. So if you're wealthy and you've got complicated tax affairs, just get it in order, because SARS has got a special unit. They got a good guy back, a competent man back in charge, in Edward Kisweta. The problem is that the tax morality is at the moment at a level the same that we saw during the worst of the Zuma administration, where what was being brought in, they call it the tax buoyancy ratio. And when the tax buoyancy ratio is under 1, it means that you really don't want to increase taxes, because you're going to be receiving less into the future. And during the time that the tax service, so SARS, was hollowed out, the tax buoyancy ratio went below 1. It was far higher than that during the Gordon years, and it's expected to stay below 1 this year as well. So part of the reason for another part of the reason for not increasing taxes this year is that the state doesn't have the capacity to actually collect the taxes. So if people are going to cheat because taxes are higher, and the state doesn't have the capacity to collect it, because SARS isn't actually geared up yet to do that because of all the abuse that has happened there over the past 5 or 6 years at least, it just doesn't make sense to increase taxes this year. Who knows, next year they might feel more confident, but at the moment it doesn't make any sense. And there's the personal income tax tables. If you'd like to make a screenshot of this, you'll be able to work out your own income tax, what you'll be paying in the year ahead. Not a bad idea, those of you who are trying to sort out your tax position so you can take advantage of the 12J allowances. Incidentally, I read J for I for some reason. I couldn't understand why. In the fine print of the documents today, it said that the 12J allowance for industrial policy would be terminated at the end of March 2020. It's actually the 12I allowance. It's got nothing to do with 12J, what Kevin Shames and Bright Light Solar are doing. Nothing at all. That continues for at least another year, and let's hope that incentive goes much further than that, because it's been one of the most successful tax incentives that government has brought in. You just wonder how much worse the employment situation would have been without all of these 12J companies are investing in small businesses. But anyway, I made a blups there. Maybe it was that 4 o'clock morning this morning that Stuart was talking about. So I saw a J for an I, but anyway, we got that cleared up. But as you can see here, this is the personal income tax rate. Take a screenshot of this, and it'll be on Biz News soon anyway, so you'll be able to get this to work out your own tax rate. So who's benefiting from all of this? Big beneficiaries are state employees. as you can see there, the state employees continue to take a big chunk of total spending, about, well, over a third. Okay, it's down a little from where we were in 2012, but it still is 35, 36%. And this is the area where Teacher Mboweni has really been trying to make an impact, because if you can bring down the the employee share of your expenditure, almost like a company that is overstaffed, if you can bring, it might cost you heavily in the first year to give people retrenchment packages and so on, but then at least you have lower running costs going into the future. And in the last 2 years, Mboweni has tried bringing in early retirement. You might recall that there was a lot of excitement 2 years ago when he initiated this package for public sector, for public servants. They made it attractive enough, they believed, to get people to go off at 55 rather than 62, and or something like that in their ages. They were expecting 30,000 state employees to take the packages. The consequence of that has been an abject failure. A total of 4,000 have actually taken the packages. So you can see there's no impact whatsoever in the overall consolidated expenditure. In the past year, the taxes to fund public sector employees continued to rise. It's really a very difficult situation for the government, because it has to go head to head with the trade unions. Now, at some point in time, they got to bash heads, because it cannot continue along this basis. The public sector employees have had their salaries increase in real terms on average by more than 40% over the last 12 years. And that is paid for by taxpayers. So the taxpayers are paying too much. You can't take more from the taxpayers. So now you have to borrow from future generations to pay for current expenditure and for the employees of today, because the trade unions are so strong. Big problem, isn't it? Here we go. There's something that I pulled out, a table that I pulled out from the mini budget presentation, and it shows you exactly what's being going on. There are now over 29,000 public servants who earn more than R1 million a year. 29,000 earn more than R1 million a year. And that's what's been happening on the growth of public sector growth. You can see there, that's the silver line. If you happen to work for the state, you've been doing a whole lot better than if you worked in the private sector. And as a consequence of that, our debt rating is almost certainly going to go back into junk now, when Moody's makes its decision next month. There could be a miracle, let's hope for it, but I think we need to prepare for this. As you can see, S&P and Fitch in November 2017 already had dropped us down to 2 levels into junk. Moody's at the same time moved us down to right on investment grade, and from next month, the investment grade, we're probably going to go into junk for everybody, given the situation that we now see coming out of the budget. Who knows? It could be a miracle. We could see platinum group metals surging up. And Mboweni mentioned this today as one of the things that could help the economy in the next 18 months, a trigger that could kick in. We do have changes in the mining legislation, which will promote more mining investment. We've got opening up the door of electricity to bring in the private sector, including the 5th round of the independent power producer bidding. The first 4 were very successful. Then Zuma and Brian Molefe, etc., for reasons only known to them, decided to put the whole thing on hold. Had they not done so, we might not have been in such a parlous situation with the supply of electricity as we are. But both in the State of the Nation and today, there was pretty good news on that front, that the private sector is being brought in, but probably too late. And South Africa's underperformance is reflected here. And something else that I pulled out from the mini budget, as you can see, where the purple line or the maroon line there, and these are against peers that aren't exactly in the top 10 countries that, or most of them that you'd like to live in. You can see Mauritius. Okay, most people would like to go and live on the beach in Mauritius, but Mauritius's GDP per capita, which was similar to South Africa's in 2007, is just streaked ahead, more than double it's now. Similarly with Thailand, Botswana, and so on. So that's the story of the budget 2020 for today. Stuart, do we have any questions?
Yes, thanks, Alec. Very comprehensive. Thanks a lot for that. A few questions. PG X-Team wants to know, in your opinion, is there not a parallel to Zimbabwe going back 20 years?
Wow. No, because we've got a government here that's trying to do the right thing. Since 2012, this government has been attempting to reduce the cost of, or rather the Treasury. Let's start again. The Treasury has been trying to cut back on government spending since 2012. In Zimbabwe, that was not the case. Then we had a president, a little bit like P.W. Botha, in fact, and I remember very well being at an International Monetary Fund conference where Barend du Plessis was the finance minister, and P.W. Botha back home had just announced a massive increase for public servants. And then the day afterwards, he announced that there would be an election. And Barend du Plessis had no clue what was happening there. In this case, you haven't got and I guess Mugabe was the same kind of a leader as P.W. Botha, total autocrat. You don't have that situation in South Africa. Here you have a leader who understands economics, who is aligned with the finance minister, who is aligned with the treasury. So it's a very different situation to what happened in Zimbabwe. Is it a difficult challenge that is faced? Of course it is. It's a country that is trying to fix the mess that was created over the last 9 years, and worse, the mess that continues, or the friction that continues to be created by those who made the mess, shouting their mouths off to anyone who will listen. There's a case to be said that just lock them all up, or kick them out of the party, or do something with them so that they can expose themselves, or maybe just educate people about what's happened to our country through these people with their malfeasance. But we're a democracy and everybody gets to have their say. But no, very different to Zimbabwe.
Thanks, Alec. Michael Summerton just wants to know, was there an update on expat tax, or are SARS backpedaling?
That's very interesting, Michael. I didn't see it. It doesn't mean it wasn't there. You know what happened today? I went to Pretoria rather than Cape Town. Every year I've been going to Cape Town, and it's pretty slick and well, really efficient in Cape Town. Pretoria is just different, almost like a different country. In Cape Town, we were given lots of time. You walk in at 6 o'clock and you're given all the documents and you can work through them all. And I had plenty of time to do that. Here in Pretoria, I had enough time to work through this stuff, and I worked through it. I did a lot of preparation, thankfully, ahead of it. But I saw nothing in there about expat tax, and nothing in the budget speech itself. And I guess that if it was something as sensitive as that, if it was going to happen, it would have been more widely discussed. Expat tax is there. There was a little thing that was mentioned, but I guess we're going to have to just go and dig around a little more to get. Oh, I'll tell you what it was, that there's an amount of 1.25 million up to now, or it's going to be capped at 1.25 million, which South Africans can earn without having to pay tax. South African residents can earn from foreign income without having to pay tax on it. That was the one mention of international income. But the whole expat tax story, you know, we're an incredible country. We muddle along. We do stupid things, and we make stupid statements, and we have people making stupid statements, and then we kind of reassess and then fix it again, and then somehow manage to muddle through. And on the expat tax situation, where effectively, remember, you've only got just over 300,000 people who are generating 40% of income tax. If you're now going to cut, say, 10% of those, 30,000 people, because they're expats who still pay tax in South Africa, you're going to hit your income tax very hard. So it could be one of those, but I'm really you can't put your head on a block on this one. It is just the situation the country's in. It doesn't need to take any more risks on losing more taxpayers.
Thanks, Alec. Karen mentions, is the budget less bad than the market expected given the rand movements this afternoon when Tito started talking?
No, I don't think you could get a more bad budget than this. What we know is that the country brought in 10 billion rand less than it thought it would as recently as 4 months ago. What we do know is that the economy grew at 0.3% rather than 0.5%, which was expected 3 months ago. And that's really pathetic. It's a pathetic level of growth. What we do know is that a lot of money is being spent on Eskom or injected into Eskom. That's number one priority. And the understanding exists that if you don't have electricity, you don't have a country. So you don't have an economy, a modern economy. So you've got to get Eskom right, or you've got to get electricity right, maybe in a broader sense. The international investors would not like this budget at all. And the reason they would not like this budget is because they don't have time to come and walk around South Africa, see what great people we've got, the enthusiasm, the energy, the informal sector, etc. All they look at is the ratios, and the ratios are horrible and going to get worse. So no, the reaction of the currency and the reaction of the international community is entirely predictable, as is the downgrade that is almost certainly going to come in March.
Thanks, Alec. Janet just wants to know if anything was mentioned on capital gain taxes.
No, Janet, nothing. No more increase in capital gains tax. No more increase in property tax. Interesting, property taxes, for instance, were the take from property tax was far lower than had been anticipated. Remember, they jacked up property taxes in recent years, and it's all part of this understanding that when you increase taxes in a population that doesn't have the capacity to pay them, you actually get less, because as you increase the taxes, people have a greater propensity to cheat. Overlay onto that a South African Revenue Services that is been badly depleted over the past few years through state capture, and your incentive to cheat gets even higher, because you cheat because they want you to pay more, but you're probably not going to get caught, or you're less likely to get caught because SARS is not so good anymore. So as a consequence of that, that penny has very much dropped in Treasury, and Treasury is saying it'll just be stupid to increase any more taxes at this point. Doesn't mean it'll never happen in future, but at this point, the understanding is very clear that higher tax rates are actually going to have a negative effect, and it might in fact be the case into the years ahead. South Africans have seen their taxes increase substantially since 2012 as part of the whole strategy towards trying to get lower budget deficits and trying to balance the budget. You can imagine politically to increase taxes in the Zuma administration was not a problem, because, well, the cronies weren't paying taxes anyway. They had their friends at SARS, and the people who were being taxed were those that the administration didn't like, or the people who were paying the taxes. Now that has all changed, and there's a far more rational approach towards what higher tax rates mean, and everybody's paying tax, or certainly the people in this administration are doing so.
Just on the downgrade, I think a few questions want to know, what do you see the impact being on exchange and interest rates, or has much of the bad news been accounted for already?
I don't know. I would imagine that the financial markets and those who play in it are far more intelligent than individuals like myself, and as a consequence of that, they would have worked it in almost certainly. It's likely to, it must have an impact in the longer term. When South Africa comes out and starts wanting to borrow money again, there'll be less of an appetite. But then on the other hand, we're in a low interest rate environment globally, and if South Africa can offer a little bit of a yield sweetener, there are also some pretty dumb people in New York and London who are taking 30-year bonds at 3, 4, 5% returns. So the consequence of that is probably built into the market already. The big thing about all of this, though, is what happens to inflation. If South Africa, like in Zimbabwe, when they overspent, and that was an extreme example where they spent money they didn't have, substantially more money than they didn't have over an extended period, they had hyperinflation. South Africa is a long, long way from the hyperinflation stakes. But if South Africa were to push the envelope too far, you could see a concern moving in from international investors against the rand. That would drop the value of the rand, and then if there are not adjustments locally on imports and so on, we can see inflation actually starting to rocket. And those would be the danger points that people like Mboweni and Letsetja Kganyago at the Reserve Bank will be watching carefully.
Letitia just wants to know, Alec, in your view, she says, what do you believe are the 3 most important things that TTIP should have done to make the budget more palatable for someone like Moody's?
No, there's nothing he could have done. There's nothing he could have done. He was between a rock and a very hard place. Think of it this way. If he increases taxes, he's going to get less. So increase the tax rate, push up VAT to 20%. You know, we just automatically assume you take VAT from 15 to 20%, you're going to get more from VAT receipts than you do at the moment. In fact, the recent experience says to us, you'll get less. So we're getting that Laffer curve now that's coming in. Push up income tax rates, what will happen in that case? We'll be further out of kilter with the rest of the world. We'll get less income tax. People will cheat more because SARS is not very strong and at the moment, and won't be able to collect that income tax anyway. So you've got 2 issues there. He can't increase taxes. As much as he might say it's cause to celebrate that the taxes were not increased, he couldn't. Corporate taxes. South Africa's corporate tax is now out of line at 28% with corporate taxes elsewhere in the world. And remember, it's a competitive environment. So if you have a company that is operating here and its tax rate is excessive relative to somewhere else that it can operate, well, it might just move. It might just relocate. What has happened on the corporate side is that there is an opportunity there to raise more taxes from the cheaters, and the cheaters are the corporates that have been shifting money to lower tax domiciles. And one of the favorite ways that they do it is that they charge very high interest rates on intercompany loans to their South African subsidiaries, and then channel the profits into another subsidiary in a low tax haven like say Ireland, where they pay 10% corporate tax. That has been addressed in this budget, or certainly they mentioned that they will address it, and they will only be in future 30%. The tax that you can write back against your profits will be capped at 30%. So that's a big move in the right direction. But he couldn't do anything on apart from looking for a few loopholes here and there. He could do nothing to raise the revenue. He can do very little to raise the economic growth rate, because that requires stimulation, and stimulation you can only do when you have money in the bank, not when your borrowing is very, very high. He could not borrow less, because he's at a situation that they've done their best in Treasury, and they've actually done, under the circumstances, incredibly well to keep the spending down to an overshoot of only 17 billion. When you consider all the money that Eskom has been pulling out of our pockets, and SAA as well. Now, you can't say, well, just cut Eskom off, because you'll be cutting your own electricity off. So that you can't let that implode. You have no option but to support Eskom and just to see this thing through. Your other option there is to try and fix Eskom as quickly as possible. And there's been some big moves on that one, splitting Eskom into 3, making it more competitive, and each of those units will then again be split. Last year, you might remember this time last year, Pravin Gordhan went to great details to explain that on the production side, on the manufacturing of electricity side, they're going to put Eskom into 3 different units, where they'll have a low cost, a medium cost, and a high cost power plant competing against each other. So you've got these 3 companies which are within Eskom, which will compete against each other and people in the private sector. So there's a lot of things that are being done to address the situation, but not right now. There's nothing you can do about it now. So Mboweni he was between a rock and a very hard place. If he increases taxes, he is likely, they can play around and say that, project that they're going to get a lot more money than they will get in. But that just means you kick the can down the road, so you can't increase taxes. And how are you going to cut government spending? Well, there are projections of 160 billion rand in reduction in government spending. I'm not sure that, I don't think anybody can be sure that they'll get that right, given the record. But if any government, if any administration is going to manage to cut the public sector wage bill, they are the ones, the administration that's there now. There was nothing really that Mboweni could have done within the current construct that would have got ratings agencies excited.
Alec, just 2 questions on the growth forecast. Paresh wants to know, did it take into account the potential downgrade? While Bo wants to know, did he mention coronavirus or the impact that might have on the growth forecast?
So there was a bit of there was a slight mention on coronavirus and the uncertainty that's causing in the international community. There was also some reference to the trade war between China and the US, which now seems to have settled down. Unfortunately, it's just about the wrong time, because the trade war, they have a settlement and the coronavirus comes on the scene. But maybe just listen to that if you have the chance. Listen to that podcast that we had with Gary and Andy Cronier, who are South African teachers in China. It's the second one. We did a follow-up with them, and when we spoke to them about a month ago, we got a very good understanding that corona was big stuff in China. Speaking to them now, it looks like China's through the worst. So the global coronavirus is, of course, it kills 2% of people who get infected, but that doesn't mean it kills. It's an existential threat. So it looks like, from what China is telling us, that the coronavirus is something that is expensive for a country, but it'll get out of the system in due course. So from that side, I guess if you Mboweni and you're doing your budget looking ahead, as he has to for 3 years, it's not something that would really occupy his mind that much. South Africa is a very open economy. We must remember this. We have 50% of our GDP, in other words, our imports and export, make up half of the economic activity in our country. So we're very, very open and very exposed to what happens in international communities. Once the global trade war settles down, once coronavirus is behind us, South Africa will be one of the beneficiaries of that. The other thing that South Africa is a beneficiary of is the boom in commodity prices, which again will be supported, no doubt, by what happens when the global trade picks up again. And that's why the projection for the growth for this year, economic growth for this year, although it's pathetic at 0.9%, is still a lot better than the 0.3% of last year. The big thing, though, on economic growth in South Africa is not really what's happening externally, it's what's happening with Eskom. If we can start getting electricity into the system, as the president said in the State of the Nation, he's talking about between 3 and 9 months, bringing in 2,000 to 3,000 megawatts. Now, 2,000 to 3,000 megawatts is the equivalent of stage 2 and stage 3 load shedding. So if you can do that, you might be able to at least put a bit of a cap on load shedding, or give Eskom a bit of space to do its maintenance that is desperately required. So there is light at the end of the tunnel, and it might not be a train that's coming towards us, but we've got to keep perspective in all of this. What has happened here is the Treasury was between a rock and a hard place. It's almost like they are hoping for divine intervention or some intervention, and the intervention that could come, we're a lucky country. It happened so many times in the past. Who knows? Gold price at $10,000. Well, the rest of the world would kind of be in trouble. Platinum continuing to rise. Palladium, the way it's been going. A big oil strike off the Southern Cape Coast. There are many things that this extremely mineral-rich country could find happens in its favor. And I guess that's what Treasury is saying. Let's try and get our country properly structured so that we can benefit next time that we have a bit of luck. Stu, is that
Yes.
is that the end of it?
Alec, we
Any more?
just lost you for a few seconds there, but yes, that's the end. I was going to say that the interesting point on the coronavirus, you mentioned the 2%. I think the SARS virus had a 10% hit rate, this is from what I read this morning. So a lot more damage, but I suppose the percentage increases when the virus comes to an end, but just interesting on that.
Yeah, a 10% mortality rate on SARS and only 2% on corona. So unfortunately, corona seems to transmit a lot easier. I think SARS peaked out at about 8,000 total infected people. Corona is, well, exponentially greater than that.
Thanks, Alec. I think that's it. There's a question on your thoughts on the state bank proposal. I'm not sure if you have anything to say on that, but we can probably end with that if you do.
Yeah, there were two things on that which I haven't mentioned, the state bank and then the sovereign wealth fund. On the state bank, it is pretty clearly targeted at low income earners who do not have access at the moment to finance, and it's positioned in that way. There's going to be a lot of water under that bridge first. The government hasn't got money to throw around to lend to people who do not repay. One would hope that they'll be taking a cue from Muhammad Yunus and the Grameen Bank in Bangladesh, which has transformed hundreds of thousands of people's lives in both Bangladesh and India in its way that it approaches things. The one thing you do know about South Africa's policymakers is that they do study international models, and they do apply them when they have the opportunity to. So I wouldn't get all hissy-fitty about it just yet. I know some people are, because state banks don't have a very good record. But let's suspend judgment there. On the sovereign wealth fund, it really seems like an oxymoron if you consider it, because here's a country whose debt to GDP ratio is going through the roof, and here it wants to have a wealth fund on the side. It's a bit like if you've got excessive debt and you start putting money into a savings account. Rather pay off your debt before you worry about the savings account. But the sovereign wealth fund is specifically tailored to take advantage of mineral, or the state's share of mineral rights. Now, look, I don't know, maybe I'm reading too much into this, but we do have a very, very prospective oil province just off the Southern Cape Coast. And we are able now, or the big oil majors are very, very active there, and are able now to access the shale gas, which is off the coast there. There's also plenty of shale gas in the Karoo as well. So this is something that has gone off the boiler for a while, but so many of the policy decisions that have been made, and so many of the decisions that are made in government are done in knowledge, or with knowledge, that the rest of us don't have access to. Could it be that there's been another big strike off the Southern Cape Coast? Who knows? Could it be that with the new legislation that's coming through on energy, that it will unlock the Karoo shale gas, which will transform this country? The late Tony Twine was talking on a fraction of the reserves that we know we've got of employing 500,000 people. So there are all of these things. Now, where does the state's share go? It's 20% carry, which is in line with what other people around the world, or other countries around the world, charge. Not Zuma and co wanted 80%. That's hence nobody was doing any prospecting. But with this government, they're going to 20% free carry for government. And that means that 20% belongs to the people. Where does that money go? Just into a slush fund, or to repay debt? Or does it go into a specific area like the Norwegians have done with a sovereign wealth fund? What has been proposed here is that money will go into a sovereign wealth fund, into almost like an investment trust that the country can build up over time. So maybe I'm reading too much into this, but we must never forget that those who do the budgets, those who make the decisions and put the numbers together, have got access to information that we only found out quite a lot later. And it could be that they were quite happy not to play the rating agency game because they know there's something bigger coming down the line. Let's hope so.
Sure, thanks, Alec. It's been a very long day for you, and thanks. Energy levels still up there, which is fantastic. We'll obviously put the webinar on the website as soon as we can post this webinar for anyone who wants to watch it there. And we'll also get it transcribed, which will probably happen by tomorrow sometime, because obviously the videos are harder to transcribe than the pure audio. But yes, that should be available for all the listeners at next half hour on the website if they want to catch up, and the presentation will be there as well. So that's all from my side, Alec.
Brilliant, and thanks again we had, I think, record access of our website of the views today.
Yes, Alec, I think that afternoon mailer definitely drove the numbers. I think it was quite good points, and all that access, I think, was well received from the community, which is great.
Yeah, and also very high numbers attending this webinar today. Thanks for coming, for putting aside an hour and so of your time to update yourself. As mentioned earlier, if you are around next week, Joburg Tuesday, Durban Wednesday, Cape Town Thursday, love to shake your hand. And Standard Bank, our sponsors, have given us some tickets. There's still, I see, a few left, quite a few left. So go and sign up and come and have a glass of wine or a beer and have a chat. And I will see you next week, hopefully. And thanks for being with us tonight. We'll be back with the webinars, the normal webinar, I think, again next month. But with the share portfolio webinar will be up then next week, and look forward to seeing you then. Thanks again.